How many times have you opened your charts in the morning, spotted what looked like the perfect setup, but then got stuck asking yourself, am I supposed to be buying or selling today? You take the trade, it moves against you, and suddenly you are questioning everything: your analysis, your strategy, even your confidence as a trader. The truth is, most traders don't lose because they can't trade candlesticks or draw water resistance. They lose because they start the day without a clear daily bias, without knowing whether the market is more likely to trend up or down. Every trade feels like a gamble. But here, the good news is once you learn how to find a daily bias, you stop second guessing. You know exactly what side of the market you should be on, and you have a framework that filters out trades and puts you in line with the bigger picture. In this video brought to you by CoinNT, I'm going to walk you step by step through how to establish your daily bias in Forex so you can trade with clarity and confidence every single day. Now, CoinNT is a leading online edtech company dedicated to visualizing financial education. Our mission is to make finance accessible and understandable for all, regardless of background or experience. Through comprehensive courses on Forex, stocks, investing, money management, and financial planning, we empower our clients with the knowledge and confidence to navigate the financial world with ease. In this video lesson, we are going to be talking about finding your daily bias. But before we go into this topic, I would like you to take a little bit of your time to like, subscribe to this channel, and also hit the notification button so that you can get notified whenever we upload new educational content. Now, do also remember that you can earn reward prizes like cash rewards, trading bonuses, and personalized trading plan consultation with a mentor, and so on and so forth, by engaging with our educational content. So the more you engage with our educational content, the more you can earn reward prizes. So to learn more about our reward program, you can click on the link in the description area below. Now, first, let's clear up what I mean by daily bias. Your daily bias is simply your directional view of the market for the day. It answers one simple question: am I looking for buys or am I looking for sells? It doesn't mean you are predicting every pip the market will move. Instead, it's about aligning yourself with the higher probability direction so that you're trading in line with the market and not against it. Now, why is daily bias so important? Because without a bias, every signal you see looks tempting. You will chase a breakout in one direction, then flip to a reversal setup in the other direction. And before you know it, you are overtrading and fighting the trend. But with the daily bias, you filter out bad setups, focus only on trades that align with the bigger picture, and stack the odds in your favor. So guys, before we move on to the next section, if you want to continue learning more trading concepts like this, you can take up our 5-day free trading available on our platform. Now, this free training is designed in such a way to guide you through the simple to advanced concepts in trading. So if you're interested in taking up the 5-day free training, you can click on the link in the description area below. Now, moving on, how do we find our daily bias? Step 1 is to start with the higher time frame. Step 2 is to drop to your trading time frame. Step 3 is to use market structure. And step 4 is to identify key levels in the markets. Now, I'm going to take you through the live chat to talk about these 4 steps that I just mentioned here. So over here, we have the Euro USD price charts, right? And just like I said in the previous section, we are going to be talking about the 4 steps I listed over here on the charts. Now, the first step is to start with the higher time frame. The second step is to drop to your trading time frame. The third step is to use market structure. And the last step is to identify your key levels. Now, for the first step, I'm going to be implementing, that is, I'm going to be using the daily time frame as my higher time frame. You can use the weekly, you can use the monthly, but for me, as a day trader, I usually use the daily time frame as my higher time frame. Now, looking at the daily time frame, what do you think is happening here? You can clearly see that we are clearly pushing upwards. Now, how do I know that? By using the market structure to ascertain the trend that we are in currently. So with the market structure, you can see that we are creating higher highs, higher lows, higher highs, and higher lows, right? So we had a shift of market structure here. As you can see, where it's there printing lower lows and lower highs. But we broke above that at this level again. So let me get my line 2 and show you what I'm talking about. So you can see at this level right here, the market broke above that level once again and became what? Bullish. So as you can see here, we are now creating higher highs and higher lows, highs and higher lows, highs and higher lows. Meaning that our overall direction on the Euro USD is what? Bullish. We're in a bullish trend on the Euro USD. So my daily bias is going to be bullish for the Euro USD price chart. Now, what next do I do is to drop down to a lower time frame. That is my setup time frame, which is the 4-hour time frame. So when I drop down to that time frame, what do? I look for key levels. Because as you can see, I remember I mentioned 4 steps. Number one is using the higher time frame. Number two is using your trading time frame, which for me is the 4 hour. Why the higher time frame is the daily time frame for me. Now the third is what using market structure. And as you can see, I've implemented market structure here. Now, how did I do that? By looking at the highs and lows, right? On the daily time frame, I was looking at the highs and lows to see if you are in an overall bullish trend or overall bearish trend, which is the reason why market structure is very, very important. You need to really, really understand how to spot market structure, because if you can't spot market structure, if you do not know market structure, it's going to be hard for you to actually know the direction the market is going into. So with the market structure, we've ascertained that the Euro USD is on a bullish trend. Then the next thing for me to do is to drop to the 4 hour time frame, which is my trading time frame, to look for key levels. Now, how do I do that? Let's go down to the 4 hour time frame quickly. Now, this is the 4 hour time frame, so let's wait for that to load up. Now, that's loaded up, right? So, where are my key levels? These are my key levels. I already drew them out. So, let me start afresh by deleting this markups here. So let me just delete them immediately. So right now we are here, right? And we are bullish on the daily time frame. So that means that we have to wait for the 4 hour to align with the daily time frame. Now, as you can see, we shifted structure here, but around this area we had a break of market structure. Now, how do I know that? Because if we look closely to this area, you can see that we had a high, we had a low, and we had market break above this high here. As you can see here, this is the break above the high, and now you are now in a bullish in a bullish trend on the 4 hour time frame. Now remember, the 4 hour time frame is my trading time frame, right? So once you break above this level right here, that means that we are now in a bullish market trend on the 4 hour. So now we have the daily in alignment. Sorry, we have the 4 hour in alignment to the overall time frame, which is the daily time frame. Now, what next do I do is to look for to look for key levels. Now, where are my key levels? My key levels are my order block, my fair value gaps. So let's mark out our key levels. So if you look at this place here, we have this key level, that you have this order block, mark it out, and you see how price returns to that key level, and you have a trade setup there. This is our trade setup. Let me mark that out. So this is the order block, and this is the trade setup, right? And you have another key level here. Now we have this order block, right? We have this order block, and we have the market return back to that order block with this bullish candle here. So let me mark that out. Now for my entry time frame, I usually use the 1 minute the 1 hour time frame as my entry time frame. So let that load up, and we'll go through the trade we just the point of interest we just marked out. Now this is the first point of interest, right? So let's zoom in and see how I would have gotten into that trade, right? So now we have, remember, this is the point of interest on the 4 hour. So once price comes into that point of interest, you can see on the 1 hour, when price comes into that point of interest, we are actually bearish, because we broke below this low. So we have to wait for the market to break above this high, right? And what happens? We create we break that structure. Let me mark that out with my line 2. So you can see this is the high you're supposed to break, right? That is lower low, lower high, then lower low. So we'll break this lower high here, and now we are in a bullish market trend. Now, how do we get into this trade? I know you might ask that. So if you look here, we have multiple order blocks. So we have this order block, right? Let's mark that out. And we also have this other block right here. Let me mark that out also. So you can see price did not return to this one, but price retested this other block. So here, right here, this is going to be our entry. So let me take my position to mark the entry out for you guys. So this is taking your entry here. Your stop loss goes, I'm sorry about that. Your stop loss goes below this structural low here. And as for me, I usually go for a reward ratio of 1 to 1. So let's see. At this area, I'll be taking my take profit, because this is a 1 to 1 for me. So this is how I trade. This is how I look my daily bias. This is how I look my setups on the 4 hour time frame. And this is how I take my entries on the 1 hour time frame. Now for the second example, let's delete this and look at the second example. Now we have another example. Remember, this was the point of interest in market on the 4 hour time frame. And you can see we are still bullish on the 1 hour. Now price returns back to this point of interest here. And if you look at the 1 hour here, we have this other block right here, right? And you can see how price takes that other block. That is, price visits that other block. We test it and move higher. So how do we enter this trade? Take our position ourselves here at this other block. Stop loss goes below the low as usual. And for me, like I always say, I go for risk reward ratio of 1 to 1. So around this area, I will be taking my profits on this trade. So this is how you implement the daily bias. This is how you look for a daily bias. As you can see, it's so simple. It's very, very simple. You just have to know how to spot market structure. As you can see in this example, I looked for the market structure. That is, I took advantage of the higher time frame, which is the daily time frame. For me, I looked at the market structure on the daily time frame. So that we are bullish, came down to the 4-hour time frame, which is my trading time frame. That is, the 4-hour is my trading time frame. Came down to the 4-hour. Also notice that we are also bullish. That is, I waited for the market to align, for the 4-hour time frame to align with the 4-hour, with the daily time frame using the market structure. Looking at the market structure, I waited till it turned from bearish to bullish. That was in alignment with the daily. Then went down lower to the 1-hour time frame to look for my entries. Now, when looking for the entries, I also wanted to see that the 1 hour is in alignment with the 4-hour and the daily, which is, it needs to be bullish. That the 1 hour needs to be in a bullish trend for me to take a trade. So guys, this is how you use the daily bias to filter out bad trades, take meaningful trades, and make profits in the forex markets. So guys, up next you're going to be looking at the XNES broker in the next session of this video. Alright guys, so if you're in need of a real regulated and trustworthy broker with a wide range of trading instruments, then we highly recommend you sign up with the XNES broker. XNES was formed in 2008 and has grown to become a global leader in the online trading space. They are regulated by several reputable authorities, ensuring your funds are safe and secure. They offer a wide range of trading instruments, including forex, CFDs, cryptocurrencies, catering to traders of all preferences. XNES provides various account types tailored to different trading styles, including standard and pro accounts with competitive spreads and flexible leverage. And also, when it comes to platforms, XNES offers the MetaTrader 4, MetaTrader 5, and their own mobile app, making trading accessible and user-friendly. So guys, if you want to sign up to the XNES broker, what you need to do is to go over to the description area and click on the link in the description area below to sign up with the XNES broker. When you click on the link, that should take you to the homepage. When you're on this homepage, what you need to do is to click on this register button, which takes you to this page where you need to fill in your details, your country or region of residence, your email address, and your password. Now, when filling out your password, make sure your password meets all these criteria in order for you to move on to the next stage. So once you've done that, what you need to do is to come here and click on continue, and that should open your account for you. Right? So guys, do not forget to like, subscribe to this channel, and also hit the notification button so that you can get notified whenever we upload new educational content. My name is Emmanuel from CoinLearning, and I will see you in the next video.